everyone, this is Riya Singh, the Senior Research Analyst for Currency at Nirmal. So let's look at what has happened into the Forex market. Now, yesterday, India released its inflation numbers, the much awaited one. There we have seen a sudden surge into the inflation, and it has moved above the range that the RBI set, which is between 2 to 6%. The inflation has come in at around 6.5 in Jan as compared to 5.7 in December. So this is indicating that there might be more rates that could come in, because as far as the inflation forecasting was done, or the assumptions, we were of the preview that the inflation would eventually, as it was cooling off, will continue with the trend, and thus making the Feb rate hike the last rate hike into the RBI circle. But since it has moved above the 6% range, there might be more that could be coming in and into the terminal rates. So what was the major factor that has driven the inflation on the higher side? It was food inflation has surged drastically from 4.6 to 6.2%. So this was one of the major leading factor that has driven the headline inflation onto the higher side. Talking about the core inflation, that has remained stable. If you look at the statements that was given by the RBI governor in its latest MPC meet, they have quite focused. They are quite focused on getting even the core inflation down. It has remained very adamant above the 6%, but here the headline inflation has risen and the core inflation is still stable. So anyhow, I think RBI will continue with its withdrawal of accommodation stand, and right now it is also needed. When will the food inflation cool off? That is, of course, after we get the reports of how the crops have been, the harvest crops have been, fed, and how much it could factor into the demand and so forth. But overall, I think there could be more terminal rates that could be coming in for the Indian market. Now, apart from that, if you look at the Japanese yen, it has remained quite into a volatile session. There will be a change of governance into the central bank, and the assumption is that the new governor will probably head towards or is inclined towards a rate hike. But if you look at the rate hike perspective, they cannot do a major rate hikes or a huge quantum of rate hikes like we have seen the other central banks doing. There could be a very minor rate hikes that could be done, so this will not impact very much into the strength of the Japanese yen, considering the wide yield differential that it has with the other or around the global economies. So apart from that, the trade deficit will continue to widen on their part also. So overall, there could be a momentary gain into the strength, but overall the picture looks still very rosy as far as Japanese yen strength is concerned. Dollar index has risen from the lows, but we have seen some cool off happening lately, and this has pushed the euro and pound onto the positive terrain. We are expecting US inflation today evening, and also there will be Europe GDP rate that will come out for the last quarter of FY 2022. So overall, I think once the data comes in, we could see some slid off happening into the pound and euro. So sell off from the highs could be the strategy that you can go forward with. For dollar index, we are not predicting very strong fall. 101 should remain as a base, whereas 105 should remain as a resistance. For USD INR, 83 level is something that that the pair is very struggling to give a breakout to, and thus it places that level as a very strong resistance. If the pair breaks this resistance and trades above the 83.10 levels, then only we could see further depreciation happening. Otherwise, it will slid back to 82.50, 82.30 levels. So that's whole on the outlook of currency. Thank you.